How you doing, folks? Ordinary Income back today. Hope you all had a great week so far. Didn't put out anything yesterday. Wasn't feeling too hot. The weather changes really increased my migraines here. But we're feeling better today. We're back at it. And with the topic that's probably going to be controversial. I know some of you are going to be not happy with this. I know there's a lot of bots on Twitter that might be picking up from this. People are probably going to get their feelings hurt. But it is what it is. And the idea is regarding something I was thinking about. And that is, with inflation numbers coming out and they keep getting higher and higher, is it true that one of the prior theories that Bitcoin is an inflation hedge, does that hold based on what we've seen? And I think that the answer is no. I don't think it's that case at all. That doesn't necessarily mean that the alternative is gold is a better inflation hedge or silver is or anything like that. I'd rather just focus strictly upon the one asset class, and that is crypto, in particular Bitcoin here. And if we look at it, can we determine based on what we've seen in the past couple months that it truly holds up to that idea of is an inflation hedge? So I want to take a look in particular. While there was a lot of quote unquote inflationary events happening, aka printing of the dollar in order to do quantitative easing and all that, it did spike up while those inflation events were happening. Now that we've seen the actual result though, outside of just quantitative easing and more market-related policies and more into the average consumer's life with CPI prints, we've seen that prices have actually decreased by a steady amount starting in November. And you might be wondering, why is November such a big deal? Particular November was when we saw policy change start to occur from the Federal Reserve. In particular, November 3rd was when the Federal Reserve came out and said, we are going to be taking a U-turn in what we're doing. We're going to stop purchasing as much in QE, aka we're going to stop putting as much money into the bond market and all that. And we're looking to start, tackling this and raising interest rates, which they have done so far. So November signaled the first time that they changed their tune. They didn't change any policies, but they changed their tone of voice from what it used to be, where they were saying, the economy is still weak. We're still waiting for it to kind of grow a little bit more so we can kind of come back on our policies. And then they switched it to, maybe it's time for us to at least do a little bit of reduction here, leading up to a little bit more bigger act of reducing everything completely, kind of going from expansionary to contractionary policies, all to fight off inflation. And November was when we saw, we were seeing big prints overall, but it was a 6.8% CPI print that came out in November. December at 7.09, January at 7.5, February at 7.9. It's a ridiculous tear. And that's just consumer price index, the indexes for you and myself. There's also there's also an index for producer price index, which has been ridiculous as well. I think that's had a crazy hike as well. We can actually look it up, Fed data, PPI, and you'll see it's not exactly, producer price index. We'll do all commodities, why not? And I'm about to show you guys how I do it. Yeah, so there you go. Edit graph, and we're going to do, a change from a year ago. Bam, okay. Yeah, we'll do 1 year for now. And 5 years, we'll show a big, yep, there we go, 43. We had negatives for producer prices in March, but you've seen it's just been a crazy, you can just take a look at the rate of change of the line. It's been a ridiculous move higher. And so we've had all the factors that come into inflation. We've had high inflation prints, high producer inflation prints as well. Prices are increasing. And if you don't even want to believe the numbers, you all know you can take a look outside and see what groceries look like, what does gasoline look like, what does rent look like, and all that. All in the meantime, once the tone shifted from expansionary to we're going to be fighting inflation, and once we started seeing crazy inflation prints, crazy energy prices, Bitcoin has recently gone on a drop of to its current price, it's dropped 39%. Overall, there was a 44% drop. And so that brings the question, this is technically the environment that people were asking for. They were saying, when we have inflation or hyperinflation or ridiculous CPI prints, that's when Bitcoin is going to thrive. And so far, it's at best stalled. It's been in this range since about February 2021. It did kind of break out a little bit here, but it's still kind of come back. And if you were one to say, once they shifted tones to fighting inflation, that I want to purchase crypto, all it's done is gone down. It hasn't really shown anyone significant hedging for inflation, any reason to believe that you should be purchasing it while we're seeing ridiculous high prints. Even all the action it did, if we go to like a day range, when the price came out the other day, I think on like April, whatever, we've already seen a reduction of its move from Tuesday when the CPI print came out anyway. So I don't think it can serve as a true inflation hedge during an inflationary environment. Counter argument is this: gold hasn't exactly done the move that people are expecting it to do. This is truly the prime inflationary environment when we had the highest inflation in 40 years. The things that we were hoping would kind of mirror the moves that we want are Bitcoin and gold. While gold has gone up a little bit more, it's actually gone in a positive direction as opposed to Bitcoin. It hasn't had that ridiculous move, hasn't really exploded out to what we've been seeing. But in terms of Bitcoin itself, it was great it was great when we were theoretically looking at inflation, saying all this printing is going to lead to something. And once that kind of came out, it hasn't done anything impressive. It looks more so that it's just correlated to the fact that as long as money is being printed, it will go up. But once that printing stops, it'll go down. And once we start to see real inflation come out, it'll go down. I think the idea is if the Federal Reserve was still minting dollars somehow, that this might be increasing. But I think that's more of a testament that when you have excess liquidity, it has to go somewhere. When there's a lot of money in the system, it has to go somewhere. And Bitcoin is just one of those places. And when those dollars start to be retracted to fight off inflation or to really retract the economy, Bitcoin doesn't live up to the theories that people are assuming. But that's just my take. And this is just using the information of the price compared to the CPI prints overall. And maybe we can even chart them here. Let's see if I can even get CPI prints overall. Core CPI year over year. I can't, but I'll try. I'm not going to waste my time trying to do it here, but I will look to see if I can. Consumer price index for all consumers. Well, that's one way to look at the CPI, but and then BTC USD. So as consumer prices have gone up overall, that basket of goods, overall BTC has not gone up as much by any means here. So that's really the idea, is that while we've seen a rate of change increase, the rate of change has either stalled or decreased for Bitcoin, thus leading that it's not an inflation hedge. What is an inflation hedge? I wish I could give you that answer, but it's been tough to say. I mean, the best inflation hedge is purchasing those things that we have that are increasing in prices. So if your groceries are increasing, you have things like corn that you can buy to match inflation. You see always an oil ETF, which horrifically long-term has been bad, but recently with oil prices going up, wheat you can buy as well as an ETF. I think it's a different ticker symbol here. There's a wheat fund as well. JO is the coffee fund. So there's other ways to go about it if you're worried about the specific things you are purchasing that are rising in prices and all that. And there's ETFs for real estate. Let's see how they've done. I mean, yeah, well, they're not doing too bad, but long term they're not doing great, but I don't think they have been able to mirror the exact increase in real estate prices. But you have seen, like I showed you, the corn, wheat, cup of Joe, and you can even, I think there's like oil, but you can do other things like XOM and all that. So there's other ways to hedge for your inflation in particular, but I don't think, from what we've seen in the data showing, especially recently over the past 5 months, it hasn't been pretty and we can do a little bit more zooming in here. It hasn't been pretty. Has not been pretty for Bitcoin. Hasn't lived up to its hype. And I think overall it's been a false platitude. So that's just my opinion. Let me know what you guys think. Let's see if it causes some controversy here or not. I don't really care, but that's really it. And we'll see what happens with inflation. We'll see what happens with those tools that I showed that are mirroring corn, wheat, and coffee and all that, and oil. And we'll continue to monitor it and see what are the best things that are tracking it the best way, and what are the things that are not tracking it the best way as opposed to what people are saying. So that's all I got. Hope you all enjoyed. Let me know your thoughts, your comments below, and I'll get you back tomorrow.